This week I'm going to tell you how to help your children win the stock market game. I've advised several teams of school children participating in mock investment competitions. Usually the team whose imaginary portfolio does the best in 3 months wins. 3 months in investing is like a minute and 48 seconds in downhill skiing. In downhill skiing, the person who comes in first and the person who comes in last only has seconds between them. In fact, the person who comes in first and the person who comes in second usually has hundredths of a second between them. In order to win in the downhill skiing, you have to be flying off of the hills in a tuck position, and you're trying to either medal or else you're going to break every bone in your body. To win a short-term investment contest is very similar. You have to invest like a downhill skier. You have to bet everything on your one trip to the bottom in the hopes of being elevated to the top of the heap. That investment strategy is the worst thing to do if you're investing with real money, but if you're investing with fake money, it's the only way to win. In a mock investment competition, you shouldn't diversify. Diversifying your investment smooths returns, and it may guarantee that you get a certain return, but it will also guarantee that you're toward the top of the middle of the pack. Instead, in a competition that's not with real money, you want to put all of your capital in one risky investment and just hope for the best. Remember, in the Olympics, no one remembers fourth place. In a school competition, few will remember the team that finishes second, even if they well diversified their portfolio. A guaranteed finish in the top half isn't a worthy goal unless it's your money and you're trying to meet your goals. So my advice to students who want to maximize their chances of winning the competition is to find a single volatile stock and invest everything in that one stock for the duration of the contest. It's the exact opposite of what you want to do with real money and your portfolio. Your investments are real and your financial goals are real. So to meet your goals, you don't need to beat the investment return of everyone else. Instead, you just want a decent return, get to the bottom in one piece, snowplow your way all the way down. You just want to retire comfortably and to ensure a cash flow that will support your standard of living. If our investment philosophy were modeled after downhill skiing, then we'd simply just try to get a good return and make it to the bottom. Again, the skier that finished last would have had a good enough return. What you don't want to do is to risk hospitalizing your real retirement. So don't invest the way you recommend that your children invest in the game, and instead have a much safer and contenter retirement.